If I'm not mistaken, the word dividends is a very popular word among investors and even non-investors alike. It's a concept everybody wants to key into. It's something everybody wants to partake in. And so I want to highlight 20 benefits of dividend investing. You want to invest so as to be able to accumulate dividends, regularly. This particular content is meant for you. Number one, regular income. Dividend investing guarantees you a regular stream of income. When you invest in dividend stocks, of course, these companies pay dividends. That's what they are called dividends. So they pay regular dividends. That's why they are sometimes called dividend aristocrats. They hardly, skip paying dividends. And that particular income stream is guaranteed to those who invest in dividend-paying companies. Number two, compound growth. Companies that pay dividends, tend to grow, at a compounded rate. Not only the company, even the investors themselves. By the time by the time they reinvest their dividends, automatically, you discover that the dividend reinvested and the capital appreciation for the company will guarantee, a growth, a level of growth that is above normal. And so dividend investing, brings about compound growth. Number three, lower volatility. Companies that pay dividends, if you observe carefully, they are not as volatile as those that don't pay regular dividends, because essentially these are very strong companies. These are mature companies, in very strong industries like healthcare, like utilities, like consumer staples. Companies in these particular sectors, they pay regular dividends and they are less volatile compared to, let's say, penny stocks, compared to cyclical stocks. They are not as volatile as stocks in other sectors. Another key benefit is diversification. When you diversify, you discover that the potentials of you having more dividend from different companies are increased. The tendency of having a larger level of dividend from different investment across different sectors is increased. And so dividend investing is same thing as tied to diversification. It causes you, because you're looking for dividends, you are forced to do what? To diversify across industries you believe are going to pay you regular dividends. Number four, sign of company health. Dividend-paying companies, essentially are classified as being healthy. They have strong balance sheet, because if they don't make profits, if they're not strong financially, they will not be able to pay regular dividends. And so the strength they have financially and the health they equally possess financially, are what guarantees that at the end of the financial year, they should be able to pay you dividend, all things being equal. That is, if the directors, and agree to, or are willing to pay their dividends, at that particular point in time. Number six, tax benefits. Essentially, dividends income, they are taxed at a lower rate than all other forms of income. If your income stream is mainly dividend oriented, then of course your tax rate will be relatively lower compared to taxes from maybe a job, a salary, or other means of income. They are taxed at a lower rate. Number seven, inflation protection. You discover that the stream of income you have from dividends usually will far outpace inflation, because when companies issue dividends, most of the times they consider the prevailing inflation rates in the economy, and so dividend income tend to outpace inflation in the economy. Number eight, reduce risk. There's this particular opinion that companies that pays dividend, they are very strong. Okay, and so if when you invest in these very strong companies, in these companies with history of strong performance, reliable performance, these companies have paid dividends regularly, then of course your risk in the market, your investment risk is reduced drastically, it's mitigated. Number 9, long-term wealth building. A particular individual, I think it should be either Rockefeller or so, says that he's always very happy when his dividends, come in. And so you discover that if you have a substantial level of investment in the market, the amount that will come in regularly as dividends will baffle you. It will be a huge amount of money. It will help you to build wealth just purely on dividend alone, without considering capital appreciation, without considering the normal compound growth. Just dividend alone is enough to sustain you and help you to live even a comfortable life. Number 10, flexibility. You have that flexibility when it comes to investment because you are pursuing dividends, and by so doing you are not restricted to a particular sector or restricted to a particular industry. You go wherever dividends can be found, and so that gives you an option of being flexible. You're not tied down to a particular sector or industry. You just go after wherever you believe and you feel you are going to have your expected dividend at the end of the year. Number 11, high yield opportunities. Dividend yield can be very high depending on the payout ratio. If you come across companies that pay, a very high level of dividend, you obtain a higher yield from your investment. Just essentially through dividend alone, you will accumulate, a higher level of yield, a higher percentage profit, a higher percentage returns compared to if you're not investing in dividend stocks. And number 12, cash flow management. Dividends provides a level of income stream that comes sometimes monthly, sometimes quarterly, and sometimes even annually. And so that cash flow is always coming in. So you can bank on the fact that yes, if I spend this particular month, by next month, I should be able to have my dividend coming in. If I spend this particular quarter, by next quarter, my dividends are bound to come in. And so you have that cash flow management is well maintained. Number 13, informed investment choice. Because you are targeting dividends, and so you already have in mind what you want to achieve. I want to achieve, a higher level of dividend income. And so by so doing, you are informed already. That means you're not investing ignorantly. You have a target, you have a purpose, you are highly informed as regards to what you expect from the market. And what are you looking for? You are looking for what? Regular dividend. Number 14, dividend growth. Companies don't just pay dividend. At times, they even, the dividend payout ratio, grows. If they give out, let's say, maybe $1 this particular month and this particular year, they may pay $1.50 by next year. And sometimes this dividend keep on growing. So you have that dividend growth as a result of this strategy of investing. You don't just expect dividends, but you also do what? You expect that your dividend will grow over time, over the years. Number 15, strategic asset allocation. Because of the fact that you're looking for dividend, you are strategic in your investment procedure. You're not just doing things haphazardly. Your strategy is that, okay, I want to obtain a dividend income that is as high as possible. And so that strategy is fully ingrained in your investment process. It's a guiding principle, to you as an investor. And so it will help you to be able to obtain the level and the flow of dividends, the flow of cash that you feel is necessary for you to be able to maintain the kind of lifestyle you want to maintain. Number 16, lower entry cost. And the issue is that, you see, most of these companies, can be very cheap sometimes. they could be selling below their intrinsic value, and so you have that particular, lower entry cost. You are buying these, wonderful companies at a lower price, okay, at a reasonable price, at an undervalued, price, and so your entry cost is lower, compared to other kinds of investment strategies like growth investing. You may be buying at a very expensive price. Number 17, income during market downturn. The market doesn't climb forever, doesn't rise forever. It fluctuates. It can undertake a downtrend at a particular point in time. So when the market is down, but the very fact that you have your dividend coming in, it will compensate for the what? For the downward trend your investment had undertaken. And so you may sustain a little loss here and there, but then the dividend obtained will compensate for that particular level of loss. Number 18, support for long-term goals. You may have a long-term goal of retirement, and so dividend income and dividend investing, once you are retired, will keep you buoyant, will keep you financially healthy, during your years in retirement. Please, I would solicit you subscribe to this channel, click the notification button, and then you help me share this video and comment in the comment section. That will encourage me to continue bringing in content of this nature. Number 19, attractive to risk-averse investors. Generally speaking, investors who are risk-averse, don't like risk, can invest in dividend-paying companies, and by so doing, their risk, level is mitigated, is lowered, and they can sleep, soundly, at night, not with nothing to be worried about. And so it's very, very good for risk-averse investors. And then number 20, lastly, psychological comfort. But the very fact that you have ingrained in your mind that a certain amount of money will come in at the end of every month or every quarter or every year or twice yearly, it gives you that particular comfort psychologically that yes, actually, I expect to make this amount of money, at a particular point in time. It gives you that strength, that anchor, that hope, and of course, that comfort and support. Psychologically, you are doing very well as well as economically and financially. These are the 20 benefits of investing in dividend-paying stocks. I want you to subscribe. I'm not overemphasizing this, so that I will keep on bringing this content to you, and I will take time to equally discuss the drawback and the risks involved in dividend investing as well.